In our previous video, we talked about market structure and supply and demand. Today, I'll show you how you can combine them into a simple Forex entry model using smart money concepts. Let's get started. Firstly, you have to identify market direction. Remember we said trading without understanding market direction is actually gambling, right? The trend is your friend, you want to flow with the trend, okay? So as you can see, price putting this low and this low putting this high, and price broke below, giving us a change of character. Price putting this high, broke below, giving us a confirmation that we are bearish, right? As you can see, price putting this high, break below, continue breaking structures to the downside. Okay, so that's a clear indication that we are bearish, right? Let me zoom price and let's get a clear view. Where did we stop? Okay, we stopped here. Price putting this high, first to take out the high, broke below, then boom, retraced and break below. Okay, so this is our current price leg. As you can see, we had a break of structure here. I'll mark this out, break of structure. So these are current price leg. These are swing low. Let's mark this out. These are swing low. And this is a swing high. If you don't know how to mark out your swing points, just go through our previous video on swing highs and low. You get proper understanding on how to do that. Okay, so this becomes our swing high, right? So these are trading range. So firstly, we've identified market direction, and now we've identified our trading range, right? So what we'll do next is to mark out our supply zone. As you can see here, we have this beautiful supply right here. So now we've marked out our supply zone. We'll play price and wait for price to tap into our zone. Okay, price has tapped into our zone. So what we do next is we drop down to the lower time frame. I prefer the 1 minute time frame to get a clearer view of what price is doing. Okay, so as you can see right here, the 1 minute time frame is actually bullish. Price is breaking structures to the upside. See, price break structure to the upside again. Over here, we had another break of structure to the upside. Okay, then price broke below the swing low, giving us a change of character. So our lower time frame has aligned with our higher time frame. So this is a clear indication that market is ready to move bearish. Okay, we've had a confirmation, which means we've had an alignment of structure between the lower time frame and the higher time frame. So what we'll do now is to drop down to the 5 minutes time frame and get into an entry, right? So as you can see here, we have this beautiful supply zone, the last bullish candle before the break of structure to the downside or before the change of character. So this is our entry zone. Remember in our previous video, we said in the bearish trend, price is supposed to protect the high and take out the low, while in the bullish trend, price is supposed to protect the low and take out the high. As you can see in the bearish trend. So right now we'll get into our order. We execute our order, all set to sell limits, whichever you prefer. Stop loss a little bit above your supply zone, while your take profit should be your swing low, because we said in a bearish trend, swing low is supposed to be targeted, while our swing high is supposed to be protected. Okay, so let's play price and see what happens. Okay, as you can see, price melted straight to our swing low. Don't complicate things for yourself. It's that simple. When you're in the bearish trend, you look for sell opportunity. When you're in the bullish trend, you look for buy opportunity. Okay, remember, it's safer to move with the trend. I notice most traders make mistake of getting into trade without actually understanding market direction. That's wrong. That's gambling. The trend is your friend. It's safer to flow with the trend. Okay, so if this video was helpful, do well to like and subscribe for more Forex videos. Thank you.